Hello. Despite some bearish news for oil, front-month Brent closed the week higher once again, whilst losses were seen on gas and electricity contracts. So let's take a look in some more detail. Prices continued last week's bullish trend and front-month Brent rose $1 per barrel on Monday. Prices rose due to tightening supplies, especially with the recently announced production cuts from Russia and Saudi Arabia. Brent gained a further $0.67 per barrel on Tuesday as supply concerns increased on declining US shale production. Brent fell $1.36 per barrel on Wednesday as the weekly EIA report showed an increase in US commercial inventories by 4 million barrels per day. Prices then rose within day on Thursday as Russia temporarily banned exports of gasoline and diesel to all countries outside a circle of 4 ex-Soviet states with immediate effect to stabilise the domestic fuel markets. However, late in the day, prices eased as the US Federal Reserve maintained interest rates, but restated its intention to increase them by the end of the year, which would likely dampen economic growth. Last night, front-month Brent closed at $93.74 per barrel, up $0.15 per barrel compared to last Friday. With temperature forecasts to be above seasonal norm and Norwegian pipelines returning to operation, all contracts eased on Monday. Nearly all contracts then bounced back on Tuesday as further maintenance work was required on the Troll Norwegian gas field. Prompt and near-term contracts rose on Wednesday, supported by ongoing Norwegian supply issues, whilst the curve posted losses. EU storage is at 94% full and 5 LNG vessels are due to arrive in the UK by the end of September, which added downward pressure to prices. Most contracts rose on Thursday following the announcement that Ukraine's Naftogaz would not renew its transit contract with Russia when it comes to an end at the end of 2024. Whilst flows are significantly reduced through Ukraine, a significant amount of supply would still be lost over the coming years. Last night, near-term contracts closed higher, whilst curve contracts closed lower than last Friday. Summer contracts lost around 3%, whilst winter contracts lost around 2%. Healthy wind generation, weaker gas and carbon all pressured electricity prices lower on Monday. Prompt and near-term contracts eased on Tuesday, taking direction from healthy supply-demand fundamentals. However, curve contracts rose in line with their MBP counterparts. All contracts remained supported on Wednesday and were mixed throughout Thursday's session. Last night, all curve contracts closed lower compared to last Friday. Winter 23 closed at £110.5 per megawatt hour, down £3.15, whilst Winter 24 closed at £125.75 per megawatt hour, which is down 1.65. You can download the full version of this report from our website. Thank you for watching as always, and we will see you next week.